Chapter 22, Loan IQ, Deal, Tranche, and Drawdown Reality. Finastra's Loan IQ is the market leader for syndicated loans and complex corporate facilities, processing trillions in commitments globally. Built for structured credit where general core systems often fail, Loan IQ adopts a transaction-centric approach. Loan IQ's positioning: syndicated market dominance. Loan IQ dominates global syndicated lending by addressing the multi-lender coordination challenges. Agent banks manage master facilities for hundreds of participants. Lenders reconcile their books with agent statements. Borrowers require consolidated views across multiple facilities and agents. Its core philosophy is one source of truth for the entire deal ecosystem, encompassing agents, lenders, borrowers, and regulators. From a business perspective, syndicated lending involves multiple lenders for large-scale financing, inherently distributing risk but introducing significant operational complexities. Manual management of participants, commitments, interest, fees, and regulatory compliance is error-prone. Loan IQ centralizes these intricate processes, ensuring transparency and efficiency for all parties. From a technical perspective, as a robust system of record, Loan IQ's architecture maintains a single, authoritative source of truth for all deal data, eliminating discrepancies. Key technical features include a centralized database highly optimized and scalable for complex financial instruments, modular architecture enabling independent development and scaling, extensive APIs for seamless integration, and workflow automation engines that reduce manual intervention. Core data model: facility to tranche to contract to drawdown. Loan IQ's hierarchy emphasizes economic instruments and legal bindings. Key differentiators from ALGO include the contract object that explicitly captures legal binding between tranche and drawdown, events treated as first-class objects for dynamic processing, and stronger emphasis on lender-level reconciliation with detailed views and tools. This hierarchical model manages the syndicated loan lifecycle. The deal or facility represents the overarching loan agreement. Tranches are segments with specific terms. Contracts detail the legal agreements with documentation and conditions. Drawdowns are actual fund disbursements. Events track critical occurrences like rate resets and amendments. And lender positions detail individual commitments and funded shares. Accurate data model understanding is crucial for implementation. Key practices include thorough business analysis to map existing loan products, defining clear conventions for naming, robust data governance for integrity, and detailed migration strategies. Tranche modeling: Loan IQ's economic powerhouse. Tranches are rich economic objects allowing granular definition of loan terms. Tranche attributes include notional or commitment amount, currency and multi-currency support, pricing grids with benchmark and multiple margins, fee schedules, amortization profiles, reset conventions, lender allocations, and covenant references. A key strength is handling complex pricing grids. Loan IQ models dynamic pricing grids allowing sophisticated interest and fee adjustments. For example, utilization-based pricing automatically adjusts margins and commitment fees based on utilization tiers, reflecting borrower usage and bank risk. From a business perspective, complex pricing grids enable dynamic strategies, incentivizing borrower behaviors and reflecting market conditions. This flexibility is vital in competitive syndicated loan markets. From a technical perspective, Loan IQ's tranche modeling uses a highly parameterized configuration engine, providing flexibility to adapt to new products, scalability to manage diverse products efficiently, auditability with clear trails, and reduced time to market for new product rollouts. Interest and fee calculation: market reference implementation. Loan IQ's engines are market reference implementations due to their accuracy and comprehensive support for complex financial instruments. Multi-leg interest calculation supports sophisticated formulas combining benchmark rates, multiple margins, utilization adders, credit spread adjustments, and penalty rates. Key capabilities include support for legacy IBOR and new risk-free rates like SOFR and SONIA, accurate compounded SOFR in arrears calculation for RFR transition, automatic credit spread adjustment application, dynamic step-up and step-down schedules, and conditional penalty rates. The sophisticated fee engine handles various fees including upfront fees allocated by commitment percentage, commitment fees on undrawn portions calculated daily, agency fees for agent bank services, amendment fees for modifications, letter of credit fees, and automatic agent-lender allocation through configurable waterfalls. From a business perspective, accurate interest and fee calculation is critical for revenue and compliance. Loan IQ's engines ensure correct processing of complex calculations, especially during RFR transitions, minimizing revenue leakage and operational risk. From a technical perspective, Loan IQ employs a powerful, configurable rule-based calculation engine with event-driven architecture, parameterized rules for flexibility, comprehensive benchmark support, and detailed audit trails. Agency functions. The coordination hub. As facility agent, Loan IQ provides comprehensive tools to automate agency responsibilities. Automated functions include interest and fee notices to borrowers and lenders, rate fixing and publication processes, payment waterfall management distributing funds from borrower to lenders, amendment coordination with voting and consent tracking, utilization reporting, and lender statement generation with detailed position breakdowns. Lender position management provides each participant with clear visibility of their commitment percentage, funded share of each drawdown, accrued interest and fees, payment receipts with proper allocation, and complete net position reconciliation. This eliminates manual spreadsheet-based syndicated loan operations, reducing errors and improving efficiency. Events and lifecycle management. Loan IQ treats events as first-class objects. Event types include rate resets for floating rate adjustments, amendments for term modifications requiring approval workflows, prepayments with penalty calculations and schedule adjustments, rollovers for extending or refinancing drawdowns, and covenant testing for periodic financial covenant evaluation. Event-driven architecture ensures all changes are tracked, auditable, and properly sequenced, maintaining data integrity across the complex deal lifecycle. Common implementation challenges. Setup challenges include incorrect facility and tranche hierarchy mapping, misconfigured lender participations, and improper contract condition setup. Calculation issues involve benchmark rate feed configuration errors, incorrect day count conventions, and fee allocation mistakes in multi-lender deals. Migration pain points include legacy data quality issues, complex historical schedule reconstruction, and custom workflow preservation. Key lessons learned. First, invest heavily in data migration and mapping. It represents 80% of implementation effort. Second, thoroughly test all calculation scenarios, especially for RFR transitions. Third, dedicate significant user acceptance testing time to agency workflows and lender reconciliation. Loan IQ strengths and limitations. Strengths include market-leading syndicated loan functionality, robust and accurate calculation engines, comprehensive agency tools, strong lender position management, excellent multi-currency support, and mature event-driven architecture. Limitations include high licensing and implementation costs, complex configuration requiring specialized expertise, integration challenges with legacy systems, steep learning curve for users, and intensive parameter maintenance requirements. Loan IQ remains the gold standard for syndicated lending because it solves coordination and calculation challenges at a scale and accuracy level that few alternatives can match. Key questions for Loan IQ implementations. How are you mapping your existing facility structures to Loan IQ's hierarchy? What is your strategy for benchmark rate feeds and fallback configurations? How will you handle agent-lender reconciliation workflows? What is your approach to migrating historical drawdowns and schedules? How will you manage lender position reporting and statement generation? What governance processes will control parameter changes and amendments? Bottom line, Loan IQ is the industry standard for syndicated loans, but success requires meticulous implementation planning, robust data governance, and dedicated expertise in both the platform and syndicated lending operations.